Check this out. We're on a 5-minute BTC chart. The price is in a clear uptrend, the structure looks good, everything feels right, and then bam! A pullback signal appears right on your screen. This is what I call a hopeful moment. It's that shot of adrenaline. You see the signal, you feel the FOMO kicking in, and your brain starts screaming, "This is it! This is the move! I can't miss this one!" But that little voice in the back of your head, the one that's seen this movie a dozen times before, is whispering, "Is this a trap?" And it's absolutely right to ask that question, because without understanding the power, the momentum behind this price move, you're not trading, you're just gambling, you're flipping a coin. This is the critical mistake that keeps so many traders stuck in a frustrating cycle of one step forward, two steps back. They see the price move, but they have no idea if there's any real strength behind it. So, how do we fix this? How do we move from guessing? We look for confirmation. We need evidence. Down here, we have a specific oscillator. Its only job is to measure the raw force of the market momentum. For that buy signal up top to mean anything, for it to be more than just a random flicker on the screen, we need to see this histogram to turn a solid, healthy green. That green bar is our proof. It tells us that not only the price is moving up, but that real buying pressure is building behind the scenes. Think of it as alignment. We have the uptrend, we have the signal, the potential point of action, and now crucially, we have the momentum confirmation. That's our green light. When these three elements line up, it becomes a high confidence setup. Now watch what happens next, because this is where this approach really proves its value. The uptrend is still holding, and look, another buy signal. The average trader sees this and their brains lights up. Great, another chance. I missed the first one, I'm definitely not missing this one. But we're not the average trader anymore. We have a process. First, we consult our momentum tool. And this time, it's bright red. This is our massive warning sign. This is the market dangling a carrot trying to lure you into a trap. Even though the price action is giving you a perfectly valid looking buy signal, the underlying momentum is telling us a completely different hidden story. It's screaming that the bulls are running out of steam and that this signal is very likely to fail. We just sidestep at a trade that would have likely stopped us out. And of course, this logic works exactly the same way in reverse. Here the trend is down, a sell signal prints, we check our tool and it's solid red. That's the alignment we're looking for. A little later, another sell signal appears, but the oscillator has flipped to green. That's a clear warning. So we stay out of that potential trap. But hey, just a quick pause. Do me a huge favor and smash that like button. It tells YouTube I'm doing a good job, and make sure you're subscribed so you don't miss the next strategy I've got coming. Alright, the big question isn't if this works, but how do you get this exact setup, this exact filter on your own chart? Let's build it together, step by step, because just adding this indicator isn't enough. The first part of this system is the indicator that gives us our trend context and the signals. For that, I'm going to search in TradingView for the double EMA with pullback buy sell signal. This uses a 50 and a 200 period moving average. But like we said, on its own, it can be really noisy and give you a lot of false signals in choppy markets. So to filter out all that noise, you need the second and most important piece of the puzzle. This is where the real magic happens. The momentum tool we're using is the Squeeze Momentum Indicator by Lazy Bear. Go ahead and add that one. But wait, this is the part people usually get wrong. Just adding it isn't enough. Default settings are not what we need. We have to calibrate it for this specific job. So open up the settings. First, in the Inputs tab, need to adjust the sensitivity. Change the BB length to 21. And bring the BB multiplier down to 1. Next, we'll adjust the channel by changing the KC length to 27 and the KC multiplier to 2.5. The final tweak is purely visual, so we can read it easily. Go to the Style tab, change the first plot to histogram, make your colors a solid green and red. And now, that's the entire framework. Since you stayed to the end, here's a common risk management approach to consider. Now, this isn't financial advice, but a way to structure your thinking. For a buy trade, a potential stop loss could go below the recent swing low. For a sell, above the recent swing high. Often aiming for at least 1 to 2 risk to reward ratio. Now that you know how to spot momentum trap, if you want to see another strategy that focuses on a completely different but equally powerful market dynamic, check out the video on the screen right now. And remember, all content on this channel is for educational purposes only and should not be considered financial advice.